welcome everybody to Monday Morning Call with Paul. Got our special guest here from National Life Group. First and foremost, I met this guy at the Ignite in person. I met him and I didn't realize how tall he was, right? And I don't mean he's super tall, but I always imagined him being like about 5'6", 5'7". But I think my man might be 5'11", 6 foot.
Yeah, the dating apps will say 6 feet, but either way, I hope I'm tall enough to reach your expectations. Either way.
Yeah. So, hey, man, tell us kind of where National Life Group is as far as the market goes for IULs in comparative with other companies.
Yeah, I mean, first and foremost, thank you all for being on the call and allowing me to be on here. I know that a lot of reps would kill to have this microphone, and I'm not going to take that for granted. NLG and IULs go hand in hand. We're number one every quarter, every year in market shares for IULs. We've had them the longest. We have all the benefits in all 50 states at no cost on the products. It's non-med underwriting up to $3 million in some cases. And we have integrity when it comes to our renewals. So what good is illustrating an IUL if it's not actually going to perform how the illustration shows? Even though we're a little bit more conservative, it's because we underpromise and overdeliver. So we really fit that market because of the full value proposition with what comes with getting our IUL.
It's funny you say that because I say that to my clients exactly. Like I'm showing you an illustration that is smaller than what the industry is going to show you. They're going to always show you 7-8% because they're giving you numbers where they might overpromise and underdeliver. I'm going to show you at a more conservative mark through a company called National Life Group, and they're always, in the top 5, if not number 1 for IULs. So it's crazy that you mentioned that here too. I think that's exactly right? We want to underpromise and overdeliver to our clients.
Yeah, and if I may, I mean, I was having dinner last year. It was one of the best dinners I've had with one of my VPs and our agency owner. Been with the company for 20 plus years. We sat down and he said, I can't stand it. Every time I sell a National Life Group illustration, there's 4 or 5 carriers that illustrate higher than you. But then he said, I love that I've never had to go back to a disappointed client. And that just kind of really stuck with me.
Yeah, I mean, that's true, right? It really is. We don't know what way the market's going to go. So why not? Especially when you're dealing with people and their money, it's always better to go conservative first, right?
Right.
Yeah. Can you kind of explain to us the structure of an IUL? Like, what's the difference between a whole life, a term? What is an index universal life policy?
Yeah, so there's different forms of life insurance, right? And it's pretty straightforward. The first form of life insurance ever was whole life. It's stood the test of time. It's punching more than its weight. But whole life is really guaranteed with not a lot of flexibility, right? On the other end of the spectrum, you have indexed universal life, where it's not guaranteed, but it has extreme flexibility. So that's kind of where it fits. I think a reason why they're getting pushed so heavily right now is because people aren't being so transactional and just saying, I'll have my savings, I'll have my 401k, and then I'll retire. There's more and more people like you guys on the call right now that are educating clients and letting them know what's out there. And at the end of the day, your 401k could change to your 201k. You know what I mean? With a market loss. And don't get me wrong, I love diversifying your portfolio, but I usually say there's one of 3 ways to get your money at retirement. You can get your money taxable, tax deferred, or tax free. And a lot of people have their money in a tax time bomb where they're going to have to pay taxes, whereas the IUL solves our puzzle piece. Die too soon, live too long, or become ill. And at least one of those 3 things are guaranteed to happen to somebody at any point in their lifetime. So I think a lot of IULs are getting a lot of traction because of those reasons and how easy it is to get approved now, because you just need an application a majority of the time anyways.
Yeah. So let's say I'm talking to a client and they don't know nothing about IULs, which a lot of our clients, it's kind of a new concept to them. What's a very easy way to kind of break down the concept? Like one of the people I see that does it really well is Juan Franco in his videos, right? But what's a way that you would explain to us that we could then explain to our clients?
Yeah, just to rewind to what I was talking about is that puzzle piece. If you guys haven't seen it yet, it's going to be on the illustration. It's going to be in our marketing materials, but die too soon, live too long, become ill. Mr. or Mrs. Client, do you feel that those are 3 really major concerns in the financial industry? Of course, and then pick it apart. You're covered if you die too soon with that death benefit. You're covered if you become ill, because the only thing more expensive than actually dying is surviving an illness. And live too long, nobody's ever had enough money saved for retirement. So if I could show you a way to solve all 3 of those, is that a conversation you want to have? Also with IUL appointments, if you sold a lot of final expense, it couldn't be more of a different sale. This isn't a 5-minute meeting you move and then you move on after that appointment, right? Like you want to spend time. But at the same time, you want to keep things very simple, right? Find out their needs. And I kind of compare it to hot dogs. I love a good hot dog, but don't go into it with me on how it's made, right? Just give me that hot dog. So You want to keep it very simple. Find out what makes them tick. If they have children, it's probably the death benefit. If they love that cash value component, it's good for retirement. So it really is a fit for just about anybody. You just have to be insurable at the end of the day.
Right. And that kind of jumps into what you and I talked about before, right? Is instant approvals, right? I think one of the cons that people hear is when it comes to NLG is it's fully underwritten and it can take some time. But from our conversation, there's ways around that. Can you kind of jump into like how we can build the app properly so that we don't run into such a long wait with the underwriting?
Yeah, so this is probably one of the most important things to understand when you're filling out applications at our company. I've been at the company for 10 years. Knowing what I know now, if I transition to being a full-time agent, this is one of probably three things I'd want to know when I'm selling National Life Group. How you fill out those applications is extremely important on whether or not a policy instantly approves or not. And I want to kind of define the difference very clearly between an instant approval and not instantly approved. Our company average is 35%. 35% of our applications never even touch an underwriter. It automatically goes to the case manager for the policy to issue. Sometimes they instantly issue as well. But here's the most important thing. It works in your favor to disclose medical conditions, medications, so on and so forth. If you select no on every single health question in the application and there was a yes, it would have to touch an underwriter. The underwriter would reach out to you. You'd reach out to your client. You'd get back to the underwriter. This is the difference maker of you guys getting paid within a week or 2, 3+ weeks, right? So it works in your favor to disclose things. If I'm filling out an electronic application for National Life Group and every single health question was no, I would actually pause and I would say, Mr. or Mrs. Client, are you sure you didn't have a medication that was prescribed to you 2 years ago? Are you sure you didn't have a insurance carrier activity? You purchased a lead, right? Maybe you applied to another activity. It works in your favor to disclose things. I know that buyers are liars. I wholeheartedly understand that, but we're going to catch it, right? So
Yeah.
make sure you take your time on those applications. And I'm going to land this plane, but I'm just taking a little bit of time explaining this because it's the most important. Here's the other 3 important things. Don't ever include an attachment in the attachment section. I do not care if the application is actually telling you to. Don't include an attachment. Also, don't write in that big white box in the middle of the application, agent remarks. If you put the words thank you there, it will have to physically touch an underwriter. So if you include an attachment or type in that box, it will not instantly approve regardless of the health of the client. And then the other thing is the primary care physician. We don't care if you're seeing a doctor unless you're a child or older than 60 or have health issues, but put something in there. If it's last resort, put the urgent care doctor down the road. And then the other thing is drop downs. Don't type out medications and full names. Start to type and then you'll see the drop down filter and you need to physically click that. If you do what I just said, you guys are going to have an uptick in instant approvals, I promise you.
So let me tap in on you. Let's say that a client's taking a medication and the choice is it's not in there because they're using it for something different. Where would you type that into the notes so that you guys know?
I have not seen I should rephrase. I've seen 2 medications this year that were not in that database. But let's say that there's not one. I would just put other and then list the med and somewhere miscellaneously in the medication section.
Okay.
Yep.
Yes. Well, I get sometimes that, they take this medication, but it's for something that it hasn't been used a lot for before. It's kind of like in a trial now, and they're using it for this because they found that, hey, this particular condition, we're trying it on this kind of condition. And normally it was like just, these couple of different things. So I'm wondering if that's something we should put notes in so that you guys know that it might normally be a medication that might be an automatic decline or we need to look at this closer type thing. Can we put notes in there to let you guys know ahead of time?
Yeah, for sure. I mean, it works in your favor to disclose it. Even if your client, even if your client had a med 2 years ago and they no longer take it, you should still disclose that and then say client no longer takes it. But again, it might not seem like a big deal, but the more transparency you provide, the less likely it's going to have to physically touch an underwriter.
Makes sense, right? So kind of going back into the structure of IULs, right? What's some pros and cons of an IUL, and how should we consider, hey, this is good for the client or this might not be so good for the client?
Sure. Yeah. So with IULs, they're great, right? But you have to understand at some point, you get life insurance with your health, not your money, right? Like a lot of people that want life insurance simply can't get it. And what I'm getting to is this: if you're in your 60s or older, you're probably not going to have a lot of significant cash value growth. So you kind of need to understand that you're in it for the death benefit, right? But generally speaking, the pros of the IUL is the tax-free advantages. So 7702, those are the four numbers. 7702, that's the IRS tax code that allows life insurance to be tax-free. So with an IUL, I put in after-tax money, it grows tax deferred, and I can take out my money tax free. There's no other vehicle like that. Sure, there's a Roth IRA, but I have to wait until I'm 59 and a half anyway. If I make too much money, I can't contribute to a Roth IRA, and there's limitations on how much I can put in, right? So IUL is great for the tax-free retirement. It is still life insurance first at the end of the day. You cannot legally call this an investment. To get to the cons of an IUL, I would say that sometimes there's either greedy people or uneducated people, and they might put a client in a situation in an IUL when it doesn't fit them. If you picture kind of a seesaw or a scale, on one side you have cash value, on the other side you have death benefit. The less death benefit I have, the more cash value I'm going to receive. That's generally how these should be set up. You'll see a bunch of social media experts that say you should always do this, you should always do that option. That's not the case. You could have a 40-year-old with 5 children with no life insurance, so they might need a higher death benefit. You could have a
Right.
40-year-old that just wants protection. But at the end of the day, there's only 2 bad things that you can do in an IUL. One is if you set it up with a really high death benefit to up your commission and it's going to lapse. And the other one is if you don't sell it with National Life Group. Those are just the 2 worst things that you can.
It's a nice plug, man. I love it. Let me ask this. Let's say for those people that are out there that are more traditional and whole life is always the way to go. Let's say when you're talking earlier, you're talking about being over 60 and how it could be a pro, but why not just do a whole life policy over 60 when you know you're not going to build as much cash?
Why do some people rent apartments instead of buying homes, right? So it's all about the cost and affordability. Generally speaking, the premium of an IUL is lower than that of a whole life because whole life has more guarantees. You could have a 60-year-old that just lost all of his retirement in COVID, and he says, heck no, I don't want a market performing vehicle. I'm going to go with whole life because I want the strong guarantee. You could have a 60-year-old that's preferred in health and is going to live a long time, and he likes the idea of skipping premiums or catching up. So it's all dependent on the client. Do you want more guaranteed returns with no flexibility, or do you like the idea of flexibility but not as much guarantee? And then it kind of picks itself.
Let's go to the other end of the spectrum, right? Where traditionally, my grandparents, they me a whole life policy, when I was a kid. Where would an IUL be good for, kids instead of, the traditional whole life, I mean, that's I think a big one.
Sure. So this is going to be my take, and there's different directions and angles that you could come out with this question, but this is Devon's take, right?
Uh-huh.
511 Devon's take. So I like whole life
Uh-huh.
because you can guarantee it to be paid up. I can pay for 10 years,
Mm.
and then contractually, I will never need to owe another premium inside of a whole life contract. So when I have children, the first thing I'm going to do is design a 10-year payment whole life plan for them, because then they will never have to worry about it. The death benefit is covered, right? However, whole life is great because of guarantees, but it doesn't have as much upside potential. IULs are never guaranteed to be paid up because if it does 0% every year, the policy could lapse. How often does our market do 0%, right? I like IULs because history, if it repeats itself, they're going to outperform whole life. So I like IULs for children for cash value growth. But if you're going to do a whole life on a child, I like the idea of guaranteeing it to
The
be
death
paid
benefit,
up.
yeah.
When you never have to worry about
It's
funding.
crazy because I have both for my kids. So yeah, man, I'm
Nice.
glad I got it
Nice.
right.
Look
Yeah,
at
man,
that.
I
Look at that.
appreciate you, man. So let's say as far as like, talking about underperforming, right? You see people talking about what IULs on a larger level, nationally, what they've performed the last 20 years versus last 60 years. Can you give us some of those stats and maybe kind of illustrate why it's been such a great vehicle?
Sure. So, I mean, look, these aren't created to do better than stocks. They're not created to outperform CDs. I'm going to go back to what I said. It's still life insurance first, right? But as far as a look back, one of the allocations that we have is the S&P 500. So you don't have to take the company's word for it with illustrations. You could track the S&P 500 to give you a look at what it would have done. There's proprietary indexes that companies can invest in. I'm not going to get complicated, but everybody on this call has heard of the S&P 500. Probably one of you has heard of Pace Setter because that's in our illustration system. It's very expensive to invest in bonds with the S&P 500 because everybody knows it. So a lot of carriers get creative and invest in other indexes. It's just another arrow in your quiver. But what I'm getting at is IULs have performed relatively well in the past 20 years because the market has also performed very well, right? I would not oversell these things and say they're going to do double-digit rate of returns. It's going to be better than this. It's going to be better than that. It's just another tool to have. So the illustration system is the best tool because it gives you a look back. But just be careful of some carriers because if they're illustrating astronomically higher, you got to look at who they are as a company. We are a 100% mutual company, and we're 175 years old. We paid out claims because of the Titanic, right? So we're not going to oversell ourselves because we don't have to. We've been around forever. So if there's other carriers that are illustrating or doing things that are really, really high, there's probably a reason for that, right? So just look at the illustration system. That will give you a good idea of how they will perform.
Let's say I'm creating an illustration for a client that can start, using the money to supplement their retirement, right? So let's say they're young, let's say they're 30 years old, right? And then I build it so at age 65, they start receiving monthly or taking out monthly payments, right? And for people here to understand that technically is a loan, right? And then at what percentage, how does that whole process work for the client? So we know how it works on the back end.
Sure. So I want everybody to know this because this is actually a common misconception. What you illustrate in the illustration system, as far as changes years down the road, doesn't happen on its own. That's just not a National Life thing. That's an IUL wide thing. If I show a client funding it until age 65 and taking out distributions at 66, that's not going to actually happen on its own. The client has to remember to call in and make that change. A lot of agents say, oh,
Good
that's a
point.
bummer. You don't want to lock somebody into something in 30 years. Their needs will change in a year, let alone 30. But as far as how it works, when you take a loan out of your policy, it's going to come from the cash value and the death benefit. And what's great about the loan is it's still tax-free. And if you choose the variable loan option, the money that you take out still participates in the index. That is insane. So if I have $100,000 of cash value and I take out $20,000 as a loan, I'm still earning compounding interest off of $100,000. And the other best part, the clients don't have to pay it back unless they want to, because the insurance carrier is just going to give their beneficiary a lower death benefit check because that loan comes from the death benefit once they die.
All right. When you said choose variable, can you kind of tap into that a little bit? What choices are there?
There's different loans, right? Variable is the most popular for what I just said. It participates in the indexing. There's what's called a wash loan. So if we charge you a certain amount, we will then credit you that amount, right? That's a little bit more conservative, but the variable loan is popular because you still earn all that compounding interest.
For Micah, is that only the case for variable loan, or do other loans also participate in the cash value growth?
That is only the variable loan or the participating fixed variable loan, but not the fixed standard loan.
Perfect. And then Sydney, how can policyholders monitor performance of their IUL? Great question, Sydney.
Sydney, I'm Venmoing your $10 right now. So we have an application at the company, and there's two. There's an agent one and there's a client one. You all need to have the agent one because you shouldn't call our company. Everything's done within your smartphone application. So make sure you have the agent one downloaded. But to answer your question, your clients can go into their app and choose a certain time. They can choose the past 3 months, they can choose the past year, and it'll show how their IUL has performed. I look at mine very frequently, but through the client application, Sydney.
Perfect. And then Vicky says, if someone has been prescribed metformin, but it's being used for weight loss, where do we add the notes on the application to explain it, be sent separately?
Yeah, good question, Vicky. So it's going to ask if you take any medications, you're going to disclose that. And then it's a reflexive questionnaire. And what that means is it's going to pop up with other options to ask. Is this for diabetes? Is this for X, Y, and Z? So that's where you would disclose the medication. And then the drop downs would give you the options to kind of add some color to that.
And then Royce says, can you explain IRR and why it's important?
So Royce, I assume you're talking about internal rate of returns. IRRs are important, especially for this reason. And I might kind of unpack this question in a long-winded way, as I already have been doing. IRR is important because people in our world today like immediate gratification. They don't like waiting for things, whether that's technology or the fast-paced world that we live in. IRR isn't as simple as I paid $100 this month. What's my return? It's life insurance, right? That's why when you look at year one, some IRRs are going to say 4,000%. Because if I pay $300 and the company pays out 300 grand when I die, that's a pretty good IRR. By the way, I don't know if that's 4,000%. That was an example. But IULs are marathons, not sprints. This isn't a savings account. You can't just put money in and take it out the next day, right? So this is a long-term play. You will have clients that get statements year 2, 3, 4 that won't necessarily have a great rate of return on the cash value. But the reason why these things are structured as a marathon, not a sprint. So after 10 years is when you've paid for a lot of your costs of insurance expenses. That's why they perform well, because of compounding interest. But remind your clients, I know that you didn't get a lot of cash value year 2 as far as how you're feeling, but if you died the day after this policy was issued, the insurance carrier is paying you hundreds of thousands of dollars. So that's kind of where the IRR is really important.
Perfect. And then Jordan says, should we not attach a photo ID at the end of the application to speed up the issuing process?
Nope, you shouldn't. You don't even need to do that. And I don't sell very often. I sell maybe 3 or 4 times a year. My buddy's girlfriend is from Russia and she moved here 3 years ago. When I was filling out her application, it said, please attach a copy of the visa, her driver's license, so on and so forth. I didn't, and it instantly approved. So do not attach anything in that attachment section, ever, ever, ever.
All right. And then Mr. Amaker, hey, Devon, does the balance sheet benefit rider affect commission or the chargeback schedule?
So it does. What the
Great
balance sheet
question.
benefit rider is it waives all surrender charges inside of the policy. That actually makes it so you can take out a loan after 30 days of the policy as well. You get paid over 6 years. You do not get paid your commission in 1 year. So it does spread out your commission over 6 years. It actually ends up paying you more in its residual, but you don't get your full commission in the first year.
And then before we go to the next question, you touched on infinite banking. I think that's a huge topic of discussion. So a lot of things that you hear on the internet, whether it be, Facebook, TikTok, Instagram, is that IULs are great for infinite banking. And so there's then there's the other side that says it's terrible vehicle for infinite banking. Kind of explain infinite banking concept and then what your take is on an IUL as a vehicle for infinite banking.
Sure. So I'm just going to say this straightforwardly. They're very straightforward. In order to achieve infinite banking by definition and truly, you have to use a whole life policy at the end of the day because it's guaranteed. So in order to 100% achieve infinite banking, you have to use a whole life. Could an IUL work for that? Potentially, but it's all about leverage, right? So after the first year of my policy, I could get a 6, 7, 8, 9, 10 plus rate of return in my IUL. I could get 0, right? So if I borrowed out money with infinite banking, I'm hoping that I leverage money and then I'm going to get a higher return on what I was charged. So whole life is great because it's contractually guaranteed. You know what you're going to get. IUL could achieve that, but it's not guaranteed. So again, in order to achieve infinite banking, which when people do this, they go through strenuous and extensive trainings with whole life. You do have to pivot to a whole life product. I don't advocate with the IUL for infinite banking as much.
Yeah, but it's a lot of people, I think, in the industry, that I've considered really wise and have been doing it 20, 30 years. They have that same opinion. If someone goes to urgent care for their med exam, but doesn't know the physician's name, can you just put the name in the medical center or will it delay the process?
Got it. I'm sorry, Michael. I didn't answer that right. Yeah, just put the medical center. A doctor would be nice, but don't worry about that. You just want to fill something out. My apologies. I read your question wrong.
All right. And then Camilla, I missed her question. I had a client whose premium was modified from 67 to 400 due to vehicle report. They had 3 speeding tickets in the past year. How long does a client have to wait until those driving incidents don't affect their coverage? Great question.
So it depends. I'm surprised we insured somebody with 3 speeding tickets in the past year. So there's not an exact time frame. DUIs are a different story, but as far as speeding tickets goes, it just depends. One is kind of a, no big deal. If you have 2 within the past 5 years, that muddies the water.
All right. And then I submitted to Louisiana app 624 and got the license 626. NLG is asking me to rewrite the app because I didn't have the license upon submission. Isn't LA just in time state?
No, the only state that you have to be pre-appointed in is Pennsylvania. New York works a little bit differently, but the most difficult state is Pennsylvania. Honestly, I'm surprised that they're asking you to redo that. Alfred, if you want to email Paul that policy number and he can send it to me, I will look at that application for you. I'm not making any promises, but I will look into that for you.
And then let's see here. Micah, NLG also has a total secure for whole life. Is that a good product for infinite banking? And how do the dividends work? Great question, Micah.
So we are a direct recognition whole life company. I will tell you, yeah, our whole life will work for that, Micah, but our whole life is death benefit driven, not cash value driven. So we have a good whole life policy, especially because it's flexible. You can pay more and potentially pay less depending on how you structure it. But our life is more death benefit sales than it is cash value sales.
Yeah, that makes sense. So kind of jumping out of the infinite banking concept, what's some I don't know how you would say that. How would I word the question? Let's talk about more about how do I decide, hey, this client with is going to be more of a better avenue for them towards the more cash value side versus more the death benefit. What's some questions to kind of get down to the root of it? Because sometimes you get clients that say, I want the cash benefit, but as you diving through it all, you realize that, hey, maybe the death benefit is more of a big thing for them.
That's a really good question, Paul. I'm glad you asked that because I would definitely challenge you guys not to be transactional and just plug in a formula and go, because every client is going to be different. That's kind of the beauty of what we do. So what works for somebody might not work for the other person. It's asking the right questions. So the first big one is, do you already have life insurance on your life? If they don't, then they're potentially going to need a higher death benefit. So you might want to look at level instead of increasing right there. Also, do you have children? Do you have a mortgage on your home? What's your asset to debt ratio? Are you already saving for retirement? Are you in debt? I know I'm asking you a lot, but just to dial it very specifically, I'd ask if they already have life insurance at the end of the day, because that's one of the most important things. Ask them if they have a mortgage and ask them if they have children. Because if you designed a policy for cash value for them and then they pass away, goodness forbid, in a year or two, and you only give that spouse a $100,000 death benefit check, but their house was worth $300,000, they had no other insurance, you kind of really could have done a little bit more fact finding to put them in a better situation. So it's just finding out what their needs are. And at the end of the day, the budget, like I'm sure a lot of us would, love a Porsche, but we can't exactly afford it. So figuring out those detailed questions, just diving a little bit deeper.
Yeah, it makes sense. What's some questions that you don't get asked a lot that you feel like people should know when it comes to national life group, IUL products, whole life products? What's some things that you wish people knew or asked you more?
That's a great question, Paul. So I'm going to zoom out from the whole life part for a second because we are an IUL and term driven company. We have a whole life, but we're really known for our IUL. It's just understanding how we operate because we are a storytelling company, right? So what we have is we have the living benefits and a lot of agents sleep on those. So the living benefits are powerful because it's life insurance you don't have to die to use. Last year in 2023, we paid out $100 million in living benefits alone, not death benefits, not loans or anything, just benefits. So a lot of
million.
100 million just in living benefits alone. And then the other thing is knowing what you're selling in education. So you said his name earlier, and I'm going to brag about him, Juan Franco.
Yeah.
When he submits an application, I don't know if you guys know this, he tells the client it could take 30 to 45 days to hear back from the insurance company. That's the expectations that he sets with his clients. So you know what? When those clients get instantly approved or they take 7 days, they're already impressed, right? So it's setting expectations. And in IUL, it's not a final expense policy. And I'm not knocking final expense. You will never hear me talk bad about another carrier, and you'll never hear me talk bad about a certain form of insurance because these things are regulated, right? But it's knowing what you're in for. This isn't, I'm selling a policy, it's going to hurry up and issue right now. We do have the speed to issue, but one thing I wish agents would be aware of is what's called conditional coverage. When you fill out electronic applications, conditional coverage means even if the application hasn't been issued by the insurance carrier, if something happened to your client and they died, we would still potentially pay out that claim, as long as they didn't lie to us or there's nothing that was caught, and as long as they fill out the banking information. So rest assured that your clients are covered. But I also appreciate that you guys are 100% commission based. So if you guys need to get paid, let me know and I'll pull those levers. But every agent that tells me, oh, my client's getting really, really antsy, I have a feeling that commission's kind of a factor there as well. So just know that your clients have that peace
Yeah.
of mind while it's waiting to issue. But I also know that the faster policies get issued, the more leads you can buy, the more families that you can help. So I'm definitely
Right.
sensitive to that fact as well.
That makes a lot of sense. Right. Well, hey, man, bring this to a close again. Thank you so much for, I know you have a short amount of time, so I really appreciate you hopping on. We definitely want to invite you back again, especially in more detail with some of these things. Is there anything that you'd like the world to know as far as National Life Group goes?
No, I mean, whenever you write a new carrier, it's like you're playing the same sport but a different team, right? So you just got to learn their playbook. Don't call our company. Stay within your smartphone applications in the portal for everything as far as new business goes. Definitely take your time as far as filling out those electronic applications. And our submission to commission truly is as fast as it gets. You just got to understand how we operate. And also, thank you guys for all you do. There's 737 insurance carriers in America. So when you submit an application to us, I don't take that for granted. So I hope that you guys feel my support and everything behind you. So just appreciate all you do. I hope everybody has a great 4th of July. I'm happy to come back on as well. I do have an extra 6 minutes so I can take more questions. I also take compliments too, if you want, but all jokes aside, I appreciate
I
all
feel
you
like I gave you enough already, man. I don't know if
do.
you need
I
more.
know, right? I know.
Right. Hey,
Yeah.
thanks again. Appreciate you. And everything you provided us. Thanks, man. Appreciate it.
Awesome.